Well, here we are with multiple choice questions on the audit opinions, right? This is the culmination of everything we've seen. Yeah, you've got the audit reports, but the audit report revolves around the audit opinion, which is what you are hired to create, right? You're hired to decide an audit opinion. Let's dive right in. So if an auditor has issued an adverse opinion, so got a bad grade, got an F, on a complete set of financial statements, the auditor is precluded from expressing which of the following in an audit report on a single financial statement of a non-issuer entity. That's a word salad right there. That's a jumbled, word way of saying it. So I will dissect that for you and make that in much clearer language. So what it's saying is we have an adverse opinion overall on the balance sheet, income statement, cash flows as a whole, right? So that's what the first part is saying. So then the auditor is precluded, meaning the auditor is not allowed to do which opinion on a single financial statement of the entity. So if overall we have a bad opinion on the again overall financial statements, we are not allowed to give an unmodified opinion on one specific financial statement. And let's think about that for a second, right? That would be misleading. So you don't want to do that. Let's say even though the balance sheet is pretty clean, but the income statement and statement of cash flows are just an absolute mess and they deserve an adverse opinion, which because those two are bad, the overall financial statement package has an adverse opinion, you're still not going to give the balance sheet an unmodified opinion. That just wouldn't be the right thing to do. It would mislead investors because they might say, oh, but this is clean, so it's fine, right? So it doesn't accurately reflect the company's performance and health. That would not be ideal. So just, kind of that's the thought process, but also definitely something to memorize. The rest of these, you could definitely disclaim an opinion on something, give a bad opinion on something else, but you definitely are not going to be able to give an unmodified opinion to a single financial statement when overall you've given it a bad grade. Alpha Inc. operates a chain of restaurants in highly populated tourist destinations in the southern United States. Because of recent events beyond the control of management, it is likely that Alpha will not survive the year. So it looks like we've got a going concern issue. The auditors should report Alpha's situation. How so? Now, as I've said time and time again, when it comes to going concern, just because we have going concern does not mean you need adverse opinion, right? You could have financials, you could have a company that's on fire, losing billions of dollars a year, just a complete mess, right? Just awful, but like they're still somehow managing to operate. Maybe they're getting cash injections from investors, whatever it is. But as long as they properly disclose that things are going to the shitter, right? As long as they properly disclose that, okay, we are likely not going to survive, then they can get a clean opinion. So just a note there, right? So it looks like here, right, beyond the control of management, it doesn't really matter too much. Ideally, this question would also say that management has properly disclosed it, but if it doesn't, we're to assume that they did. Again, you are going to get some questions like this. The AICPA likes to write questions that maybe don't have extra information that you might be helpful, but that's kind of your practice, right? You run through and you just kind of get a vibe, right? You kind of see what information they may exclude sometimes. All right, but this question's really trying to these types of questions always try to get you to go for adverse opinion. Like it's a very common thing, right? They mention going concern issues. They want you to get adverse opinion, but in reality, a lot of times the answer is just going to be the unmodified, right, or unqualified opinion. So it's not just going to be a note to the financial statements. So the auditor doesn't make notes to the financial statements, the management does, right? So we can say like other matter paragraphs and emphasis of matter paragraphs are the equivalent of notes to the financial statements, but for the auditor. So, financial statements are created by management, then they make the notes. The audit report is made by the auditor, and then they make, the emphasis of matter paragraphs. So that's why we would cross off letter C, because the auditor doesn't make notes to the financial statements. We're not going to disclaim an opinion because there's no reason not to. I mean, there's no reason to do that. Disclaimer of opinion is when there's disagreement with management, there's a scope limitation, right? We've been through all the reasons. So simply put here, it's going to be an emphasis of matter paragraph, which we also went through with the going concern section in management, right? You make an emphasis matter paragraph with the unqualified report. So clean financial statements, again, presumably, the financial statements accurately reflect the financial position of the company, and we're good to go. So again, emphasis matter paragraph talks about something that is in the financials. So again, if we have an emphasis matter paragraph, it's under the assumption that we are emphasizing something that's already there, which is the disclosure that there is a going concern issue. Hope that talking through that was pretty clear, right? Definitely a situation that we could see throughout the exam. So making sure that commonly asked question is now under your belt. Next up, an entity's comparative financial statements include the financial statements of the prior year that were audited by a predecessor auditor whose report is not presented. If the predecessor's report was qualified, what should the successor do? Okay, so very common. You'll see questions in multiple sections about predecessor auditor, successor auditor. So we've got comparative financial statements. We're issuing year 1 and year 2, right? We did year 2, but someone else did year 1. So it's kind of our issue, right? We're dealing with year 1. We're dealing with year 2. Here's the financial statements. We audited. We took care of year 2, but they want to issue them as a package. So what do we do? Do we, as the successor auditor, do we express an opinion only on the current financials and make no reference to the prior year statements? Well, no, we can't really do that because it's being like we essentially are signing off on the deliverable, right, which is the auditor report on the comparative financial statements. So we can't just ignore, pretend it didn't exist. We can't do that. As much as you might want to pretend like it didn't exist, you just can't do that, right? So you got to do something. So we're not going to just ignore it because, again, that would be misleading to investors if we made an audit report for this comparative financial statement package of 2 years worth, but we were just like, hey, we only really did something with year 2. Just everyone ignore year 1. No, that wouldn't work. Does not fly. So explain to the client that comparative financial statements may not be presented under these circumstances. I mean, that's not true. Like the thing with this answer is that's not true. So first off, I'm going to say this is the wrong answer. Now, let's say there's a big problem about getting the reasons of the predecessor auditor. In theory, the auditor could say, hey, it's probably not your best interest to do comparative financial statements. And if that is actually the case, right, if there's a legitimate reason why maybe there's no reason for, or maybe they shouldn't do comparative financial statements, then that could be a valid answer. But the way they word this too may not be presented under the circumstances. No, there's something you can do. This is a cop-out. This is us being lazy, right? This is the auditor being lazy and saying, hey, yeah, we're not gonna let you do this. But no, there is a little bit of work we can do that would allow us in this circumstance to issue that comparative report. What about issue an updated comparative audit report indicating the division of responsibility? Okay, I mean, that sounds like it could be a valid answer, right? Let's say, looking at that without thinking about it too much, that sounds like it could be valid. But let's look at the next one. Indicate the substantive reasons for the qualification in the predecessor auditor's opinion. So this one is going to be our correct answer, right? This one, in theory, without thinking about too much, sounds like, yeah, sure, right? The predecessor auditor had year 1, we have year 2. But the thing is, the investors don't care. They don't really care who did the audit. They just want to know if there was a problem, what was the problem and why was there a problem? So us just saying, hey, someone else did year 1, that doesn't help the investors. But letter D indicate that the substantive reasons for the qualification in the predecessor auditor's opinion, right? So us as the successor auditors for year 2, we are indicating the substantive reasons, right? The significant reasons, the reasons for the bad opinion, the qualification in the. So we're basically just highlighting, right? Because that's going to be out there. The predecessor auditor's opinion on year 1 is going to be out there. I mean, that report is now in the hands of the client. So us as the year 2 auditor, we're going to take that report, essentially highlight those reasons and, make note of that in the comparative report overall for the investor. So that is another great question. I do enjoy these questions, running through them and talking them through. If only I had some of you here to, make a dialogue with it is that's why I do enjoy tutoring. I do enjoy working with candidates one-on-one or in group sessions. It's nice to hear everyone's feedback, but hopefully my monologuing and me sitting on my soapbox talking about all of these wonderful topics is benefiting you as well. All right, here we go. Hart CPA is engaged to review the year two financial statements of Kell Company, who was a non-issuer. So whenever there's issuer or non-issuer, I mean, I may not have made a note of this in the previous ones, but always think ding ding ding. Okay, there are slightly different rules between them. Some significant rules. Not particularly maybe going to be the most important thing here, but always important to just make note. So previously, Hart audited Kell's year one financial statements and expressed a qualified opinion due to a scope limitation. Right, so scope limitation, you could either withdraw from the engagement, disclaim an opinion, or you can issue a qualified opinion. We talked about that before. Hart decides to include a separate paragraph in the year two review report because comparative financial statements are being presented for year two and year one. So this is exactly kind of what is happening in the prior question, except in this case, it's the same auditor. So in the prior question, it was a new auditor talking about the last year different auditors' bad opinion on the year one statements. In this situation, it's the same auditor who did give the bad opinion last year, but just pointing out, right? They are including a separate paragraph in year two because they're being presented comparatively. So see how these questions tie in, see how we're building on them and presenting it in a good way for you. So let's take a look. This separate paragraph should indicate what? All right, so what is it going to indicate? Substantive reasons for the prior year's qualified opinion. All right, well, that's kind of just stealing the answer from the prior question. So yeah, I'm going to say that sounds pretty solid. But let's keep going along. What about the reason for changing the level of service from an audit to a review? No, I am not going to say that because I don't see anything about an audit here. It says review the year two. Oh, okay. It does say audited the year one financial statements, blah, blah, blah. All right, fine. You got me there. See, hey, you're watching my thought process, seeing how I do it. Sometimes I miss things, and I think that's important, right? It's very important for you all to see how I answer questions. So, reason for changing the level of service from an audit to review. So, you are going to include this. Like, this is very much going to be included in the audit report, but this separate paragraph is specifically talking about the qualified opinion from year one. So this is not going to be the answer. Again, this will be discussed in another paragraph, but the paragraph it's talking about is the paragraph specifically referring to the qualified opinion in year one. Is it going to indicate the consistency of accounting, the application of accounting principles? Again, if there was a change, right, or if we want to talk about the consistency of changes, the consistency of principles, we would talk about that there, but in a different paragraph. So again, focusing on this paragraph that has to do explicitly with our reasons for the qualified opinion. Lastly, restriction on the distribution of this internal use only. It doesn't say anything about that here. I mean, I don't see anything about it being restricted, but even if this report was to be restricted, again, that would be another paragraph. So, mainly these wrong answers are talking about, paragraphs 2, 3, 4, but we're talking about paragraph 1. Not that those numbers relate to anything, but that's just me giving my take on it. So, we're talking about apples, and all these other things are talking about oranges and bananas and pineapples, right? So, good group of questions. Hope you all enjoyed. I know you're enjoying. I know you're having a good time. Go get some ice cream. Go have a coffee. Go get your favorite snack. Stretch. Do a push-up. Go for a walk. Walk the dog. Walk the cat if your cat likes to get walked. All right. Have a good time. Stay upbeat and stay in good spirits. And I will see you all in the next one. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material. We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because Who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.